Welcome back to another video, boys and girls and non-binary people. It's your humble and gracious host Hima. In this video we can talk about the recent rate hikes by the Federal Reserve and how this will affect our monies and of course the markets. And also, if you're new to the channel, hit the subscribe button and that like button, just jump on the like button. Before we begin, I want to give you a quick introduction as to what inflation is, so you'll understand it. People are throwing in big words. Alright, but let me make it simple for you. Let me break it down for you so you have an idea of what's going on. Now, you already know that everything around you is getting expensive. Your gas, rent, bills, and this is called inflation. In simple terms, it's the increase of price in the goods and services that we use. Now, inflation is a bad thing. Apparently, Warren Buffett, I don't know if this is true or not, but Charlie Munger, Warren Buffett's right-hand man, said that inflation is what caused the Roman Empire to fall. Alright? So this is very serious. If you look at Colombia, Venezuela, the countries have gone bankrupt because of inflation. So when inflation is really high, apparently it's 7.9 in the US, or 8. In Australia it's 3.5%, and it's going to increase. I'm pretty sure it's more than 5%, but the government doesn't want you to know that, so keep that in mind. So what this actually means is, let's say you have $100 and the inflation is say 8%. You don't really have $100. The purchasing power of the money that you have has been reduced by 8%, because everything around you is going up and expensive. So the purchasing power of the money that you have has been reduced by 8%, which means you don't really have $100. You only have $92. And this is what inflation does. The money become worthless. Okay, now that we know what inflation is, alright, I hope you guys have an understanding. Interest rates are one of the things that governments use to control inflation. So when they increase interest rates, people can't go and borrow money. So the money supply, or the velocity of the money, that's what they call it. It's a big word. You don't have to worry about it. Just think of it as, let's say the government is rapidly printing money into the society, like tomatoes, and that's called the velocity, right? And when you increase interest rates, the borrowing power that goes down, so the velocity goes down, and that kind of reduces the inflation. So that's what they're trying to do. They're trying to reduce inflation, because if the inflation goes high, people are going to be homeless. People will not have enough food to eat. Everything will be expensive, and that will be a huge problem for the governments, politically and otherwise. So they want to control this. That's why they are reducing the interest rates. And they just did it today. They came out and said, you know what, we're going to increase interest rates by 0.25%, so that when you go to the bank next time, you'll have to pay a higher interest, which will obviously reduce a lot of people borrowing money. And they're gonna have 7 meetings this year. We already had one, so we have 6 more left, meaning that there's gonna be more interest rate hikes. And Federal Reserve in America believes that these interest rate hikes will supposedly reduce inflation in this year. I don't believe that. I don't think that will happen, but that's what they're saying. Alright, so this is what basically happening. Now, how this will affect our markets? Well, let's find out. Bitcoin actually didn't respond badly, or in a good way, or it's like a 50-50, right? We're still going in that 35 to 45 range. We're kind of hovering above and below. So Bitcoin didn't really respond to it, but usually when there are interest rate hikes, technology sector or risk assets, including crypto. Crypto is also a technology and it's kind of considered risky. They get affected badly, but we don't know whether how bad this will affect Bitcoin, because Bitcoin only has been around for a shorter period of time. My guess is it will go down a little bit. It won't have a major effect, but I think it will go down a little bit. But don't quote me on it. There's no financial advice, and it could always go up. But I do expect it to come down in the short term. Okay. As for stocks, certain stocks will benefit hugely. For example, with companies who does not have that much debt, specifically the companies with lower debt will benefit greatly. Of course, their profit margins will be a little lower, but they'll still survive. Right? Companies like mining stocks, consumer staples, health stocks, they might do better. But when it comes to tech stocks, they might go down, but not all the tech stocks, but the majority will go down. Real estate market, on the other hand, look, I don't think it'll crash, but what will happen is, so because there's high interest rates, people won't be able to go out and borrow money, so it will reduce. It will actually slow down the real estate market. Let's say in a city they sell about 100 houses per year. With the high interest rates, they might sell about 70 or 60. So that's a highly likely scenario to happen with real estate. The biggest factor that I have is your savings account. Of course, now that they have high interest rates, people will also try to put some money into savings account, because now the banks will be able to offer a little bit more on their savings. So which is a good thing, not a bad thing. And right now, the savings that you have will also value. They will have more power now, more purchasing power, now that their interest rates are higher up again. But it won't be by a huge margin. So when the US dollar gains power, usually gains power when they increase interest rates, right? So if you have US dollars or Australian dollars, any kind of dollar to that matter, that has a higher purchasing power, when they increase interest rates, usually the money that you have appreciate. So this is a good thing for your savings accounts. But it's not necessarily a good thing for third world countries, because they have to buy everything. If they don't have enough dollar reserves, it's gonna put them in jeopardy. So it's a bad thing. So I hope this video made some sort of sense for you guys. I wanted to break down what's going on. I'll see you guys in another video. Until then, stay safe.